In this quick video, guys, I've compiled some of the silly things that traders say and believe. Stick around. Hey guys, warm welcome to you. Alright, so you've heard some phrases, some sayings from traders, and you know what? Traders do say some pretty silly things at times. So I've compiled some of them that I think are a little bit cringeworthy, not factual, and generally just a misconception or just being completely silly in some cases. And let me know yours that you've heard in the comments section below. Some that you think are crazy, some that you think are just absolutely stupid, silly, common misconceptions, anything like that. Stick in the comment section below. Always interested to hear what you guys have got to say about this kind of topic. Okay, so the first one is, I trade Forex because it does $5 trillion per day. I've heard this quite a few times. People say, hey, I trade Forex. Why do you trade Forex? Well, it does $5 trillion a day. That is the most ridiculous reason to trade Forex ever. If someone says that to you, walk away. It's a completely irrelevant. Guys, we're trading 10 grand account, 100 grand account, 1 grand account. It's not going to have any impact. If you've got a $10 million account, it's still not going to be relevant whether you're trading Forex, whether you're trading S&P 500, whether you're trading Apple, whether you're trading DAX. Listen, this is not a reason to trade Forex. You trade Forex because it's 24/5 and you can trade it around your lifestyle. You trade Forex because there's no gaps. You trade Forex because the charting platforms are more comprehensive, or there's no charge, or there's a lower barrier to entry, or the spreads are tighter. Those are all valid reasons to trade Forex, not because it does $5 trillion a day. It is irrelevant. It's no point. There's so many markets out there that are super liquid. Now you might say, I don't trade cotton farm month futures contracts because it's illiquid, and that's very relevant. But when you get into this sort of level, it's complete nonsense. It makes no sense at all. There's so many markets out there that are liquid enough to deal with a retail trader's 100 grand account, 10 grand account, 1 grand account, whatever it may be, than having to say, well, I need to trade Forex because it does $5 trillion a day. Pointless. Second thing is, guys, there are more buyers than sellers. A little pet hate of mine. And I'm going to be kinder here than say, I understand why people say this. But in reality, for a trade to occur, you have to have a buyer and a seller. When they agree, a trade occurs. If there are more buyers than sellers, it still doesn't affect that a trade has to occur between them. It just means those buyers are left behind and don't have the fill. Now, when a market goes high, it's normally said in the context of the market going higher. The market gone higher because there's more buyers than sellers. No, it's because those buyers are more aggressive. Now, that's why I'm going to be kind, because there may be a bigger pool of buyers, and because people are fighting for stock, they are having to be more aggressive. So I give people that. But actually, that's not the fundamental reason why price is going higher. Price is going higher because buyers are being more aggressive and they're taking offers. And when they take offers, price goes higher. When sellers take bids, bids go lower. But there has to be a buyer for every seller. You can have 1 million buyers, you've got one seller, you're going to get one trade done, and that's it. So that's something that's kind of a little pet hate of mine. Number 3, it was a trade, but it's now an investment. I know a guy who was trading, I think it was AUD, I can't remember the exact currency, but it was a trade, day trade, didn't work out for him. He ended up putting it away to say, oh, you know what, I think it's going to go up longer term. He ended up forgetting about it and leaving it there. And he's a reasonably wealthy guy, so he could do this. He ended up being 20k down on this trade, which probably, he's only wanting to risk $1,000 or so on the trade initially. Now, that's one example. I've seen other times when people have bought stocks for a kind of swing trade, it hasn't worked out, and they're going, well, it's a good investment. I think the company's going to do well over the long term, and put it in their drawer, so to speak. And we haven't got stock certificates anymore, so to speak. But that's just crazy, because it's just showing you a complete lack of discipline. A really stupid thing to do. You didn't take the trade out. It wasn't an investment. If it was an investment in the first place, fine. But if you're going for a trade that the trade hasn't worked, has now gone into the investment pile, what justification have you got for making that trading investment decision? That just seems a silly thing to me. This trade is a no-brainer. You hear this from people who are excessively overconfident about stuff. They kind of draw a bit of a crowd to them because they're so confident and cocksure about the trade or the trades they're making. Yeah, oh yes, this is a no-brainer, this trade. It's definitely going to be here by the end of the year. Definitely going to be down by this. And they say it with such authority that many people believe them, and they believe themselves. But the trouble is, when the trade doesn't work, they don't come out of it because they can't admit they're wrong, because they're so certain about the trade. There's no ability for them to say, you know what's not working, and take the loss, because there's much more at stake rather than the money. It's not just the money anymore, it's their ego, it's their confidence. They put so much weight on this trade being a no-brainer that now it becomes so hard to take the loss. And it gets worse if they make a couple of good trades, because their conviction goes up and up and up. And then when one trade goes against them, they can't cut it because their ego is so involved in it. Bang, they get wiped out. So watch out for that thing. There's no such thing as a no-brainer trade. There's good trades, but where's the risk? There's risk in every single deal that you take. You can't make money like that. Heard that so many times. You can't make money day trading. You can't make money pair trading. Selling options is no good. Now listen, there are strategies that I feel are more profitable than others, and that's a personal thing from my experience as a trader. You know, I know what works for me and I know what doesn't work for me, but I also recognize that there are traders out there operating unusual strategies that to me I can't see how they would work for me, but I know they're making money at them. And so personally, I'm open-minded to everybody. Well, listen, if you want to trade like that and it works for you, then that's absolutely fine. You know, the more people trading in the markets, the better. Now, listen, when someone says, oh, you know, this is working for me, and obviously there's people who are bending the truth a bit. So put those people to one side for a moment. But the thing is, just because someone doesn't understand how to make money with that strategy, or can't make money with that strategy, there's plenty of methods to trade that I know I'm not very good at. And so I just don't go there, but I know there's people who are super good at it. Let's say global macro type stuff. You know, higher end, looking for bigger trends over multiple years. I would be dreadful at that. But I know my niche is in shorter term stuff, day trading, swing trading, short time frames, looking for that opportunity when the price action changes, supply demand shifts. I know that's for me, but I don't say that they can't do that. So be careful when someone says, hey, you can't make money like that. Now that's different to saying, hey, be careful about that. I've done videos where I said, hey, listen, be very careful about specific strategies like selling call options. It can work, but there's a vulnerability with it that if you get caught out by a price that rips off the highs, you've got the open-ended risk. And I'll say you can't do it, but there's some things say just be careful of it. So there's a distinct difference in the kind of phrase you're using with that. And the final thing is, this strategy will always work. Hands up. I made this mistake in my early years, 2006, 2007, maybe a little bit later. I was trading a strategy that was just working so well. Perfect strategy, doing really well out of it, and then all of a sudden it just stopped working. I didn't even think that it would stop working. Of course, it stopped working, you have to then look for new strategies, look for new ways of doing things. So always be mindful when someone says, hey, the strategy will always work. Now, listen, fundamentals of a strategy may well work for a long time. There's so many strategies that I've got that have worked for a long time. Little bit of tweaks and adjustments for different market conditions, sure. But I think being open-minded and not being strict with it means allows you to adjust it and tweak it. But there's certain things that may work for a short period of time and then just stop working. You know, there's plenty of examples of people who have traded in specific market environments. The strategy has been absolutely bang on the money. The market environment's changed. All of a sudden, the strategy becomes useless. And they're like, didn't realize that. So that's something you've got to watch out for, and sort of a misconception that people believe when they find a good strategy. So always keep your mind open to more strategies. All right, guys, that's it. See you in the next one. Take care. Bye-bye.